very likely have a high impact on the overall market, the S&Ps. And let's talk about what's been prevailing so far this week, along with the levels to kind of pay attention to as we get into this breakdown of the June low. Yesterday, we were seeing a lot of price activity near June lows. I would argue that we never really broke it completely due to the fact that we never really got a strong closure below the June lows. However, we've seen quite a few testing sessions, and we are starting with a gap down open this morning. So that is something that we'll evaluate and talk about some potential plays on the intraday time frame. So, looks like audio is good. Okay. Given that it is Wednesday, taking a look at the SPX expected move, I think is going to be important. It's important to understand that the market from a quantitative expected move price activity, actually this is kind of hiding the price down there. Most of the move this week has been in line with our weekly expected move. From the perspective of where we started the week, we really haven't moved too much to begin with. There certainly is a more bearish lean as we are rejecting Friday's close, and we are seeing a gap down open this morning. So it's important to note that we are continuing this current downtrend. But as far as the expected move is concerned, we really haven't seen much volatility. And that's an interesting statement relative to the high volatility reading we're getting on both an intraday basis and across certain areas of the S&P. It's more about the fact that the expected move has been expanding over the past couple of sessions. So when you look at relative moves, this week has been wider on some of the intraday sessions, but we haven't actually touched excuse me, the upper or lower bounds of the expected move quite yet. And the reason I'm bringing this up is if you're looking for where the S&P might have some stability, it's important to note that we need to get down to the expected move lows before we see anything that is indicative of a bounce. Yesterday, there was a chance for that bounce to form in the market. We'll talk about that sort of breakout failure that occurred and the balance range reversal, part of the intraday trade thesis from yesterday. But when it comes to the SPX, we have room to move, and so far we haven't really touched either side. So as far as the option market's concerned, we are still in line this week. We're still active. We're still actually looking for about 125 points of expected movement. And so far we haven't quite gotten that. So just noting that based on previous weeks and how the S&P often tags the expected move, from that point, we'll see if there's going to be another breach or if we'll see more stability and actually close inside the expected move this week. So that's first. Second, let's talk about yesterday's trade. If you recall, there was a couple of key levels to pay attention to yesterday for breakout potential and the potential for the market to traverse back into balance. And if you recall, they were based around price activity on Friday's session. There's an area of interest on Friday that defines a very tight high and low value zone. It's an area that has been establishing the VPOC for this balance range over the past couple of sessions. And when we looked at the volume profile, this became pretty apparent. It's about 368 mid-range with that 368.8 as the inflection point. It's the area where you could consider the market to be short-term bullish and getting out of a balance range to the upside, possibly filling a gap. Now, if we look at yesterday's trade a little closer, we'll see that the price activity in the morning had a chance to do this. We actually saw a bit of a morning rally. Market was heading into some of those absolute highs from the last session, Tuesday session or Monday session. And overall, if the bulls wanted to defend, they certainly could have. They could have looked for back testing setups or anything indicative that we're trying to break out of that balance range. Now, as we started to kind of pull back in, one of the downside targets that I called out was about 366. And the reason being is it's not really VPOC in this balance range, it's more of your mid range. And anytime we see something like a high to mid or a low to mid trade, we're often going to be looking to target somewhere around 365, 366, so long as we stay within this range. But as you can tell, this inflection point then became a lower high. And this is when the market really started to sell off. You could argue that the aggressive shorting up here is a bit harder. You're basically assuming that the market will not break out on that session, and getting into position up there can be a bit challenging, especially if we do see any sort of thrust through some of the previous day highs. The real back test and failure, in my opinion, occurred here. And this is where the balance range turns into a very dangerous scenario as we start to traverse. Because what you'll notice is at this point, and as the market fails at the lower bound, that the very tight Friday kind of choppy range, everything else until we get to the bottom is a straight sell-off. There is no real back and forth trade occurring except for a little bit of that mid-range defense around 365 to 366. And it can be extremely dangerous looking for things like oversold plays. This is something that actually I ran into yesterday. I was looking to buy a little higher, closer to the balance range lows. And unfortunately, yesterday, not only did we crest through the lows, but we actually stayed underneath them for an extended period of time. We actually traded sideways once we did find that high impact bottom somewhere closer to 361 on yesterday's session. So it's a call out here of more about how to trade balance ranges once you have them well established. There is logic to this. There's sort of the idea of market profile and a little bit of when do certain forces take over in the market and who's going to defend at key levels whenever things fail or accept. Either way, there's a trade to be offered. The real key here, though, is that the breakdown after a failed breakout attempt is something that you have to be cautionary of because we've seen it before. We've seen these large sell-offs from the highs, and most of the time they're going to have that rejection at about 368.8, that back test that tells you that the market will not advance on that session. So notable on yesterday's session, we're already under the balance range. So at this point in time, the market may be changing, but as you can tell, we're already looking to back into the balance range lows. And this is where, the market really could decide to recover back inside today. At this point, it's a very weakened state. Being underneath a balance range means that we could start selling a little bit faster here. It could form into a true breakdown at this point in time. So the S&P obviously is in a very dangerous state right now. But note what can happen if the market does get back into the balance range. Understand that this move can occur on either side. it's notable to see the type of volatility we can get so long as we're above those key levels. Right now, unfortunately, we're just underneath them, so it's still bearish at this point in time. So just calling that out, how to trade these, especially in the moment, and seeing things happen before they set up is really the important part. Knowing that there's this large downside risk whenever certain things happen in the market, and really not getting yourself caught off guard while it's happening. So that was yesterday's trade, a failed breakout into a balance range reversal. Now let's talk about this morning. So the morning now has new behavior to discuss. One of the things that we probably want to get out of the way is Apple. Now, Apple did have a news event overnight. We saw iPhone 14 production get reduced. The company was looking at increasing production so long as demand facilitated it. They're not really seeing those numbers or those metrics needed, and therefore they're halting any increase in production. Not necessarily that they're halting all production, but it is being, I guess, backed away from. And from a fundamental case, that is a bit bearish. It means that the company is not seeing the sort of demand projections that they were looking at probably earlier in the quarter. Additionally, from a technical level, we know how important this current price is on Apple. For those unfamiliar, 150 is our inflection point. Whether you like it or not, Apple trades extremely heavy sized, and there's a lot of very strong decisions made relative to trading under or over 150. In fact, if we look at how Apple traded the last time it actually broke 150, it's a very dangerous time for the overall market. Just talking last time this happened, this is when the S&P was starting to break through some of its previous supports, and Apple was part of the problem. It had actually crested below that 150 and even backed into it and kept seeing fresh lows, albeit there was a lack of follow through on the next sell cycle. It's noting behavioral characteristics around this particular price, and you can see it on the chart. This is relatively true just by the volume characteristics. There are breakouts and strong impact trade above 150. There's lack of stability in this product under 150. A lot of it is somewhat driven by the options market. There's typically a lot of high open interest centered around 150. So, just noting the price is important. Now that we're trading under it, one of a few things could happen. And for this, let's just look historically. Let's look at what happened before. One thing that could happen is Apple could sell for a couple of days. We could see the shakeup based around this catalyst. But Apple last time did have a bounce, and it did make its way back to 150. If that happens, very likely that the S&P might behave in a similar manner. We might actually see a little bit of a relief rally just based on what Apple does over the next couple of sessions. We could also see this continue to sell off once we back against it. So we've seen a couple of back tests historically. Usually after the back test, some of the stronger selling can take over. Now, obviously there are red candles all across this chart, but I'm more noting the characteristic behavior of a stock like Apple once it gets under 150. Some of the wider buy and sell swings tend to be anchored at this price. And like anything, if we see more downside across the market, we would likely need to see it in a stock like Apple. Most of our other larger tech names have already sold off. They've been in a period of decline. And to some degree, they have a little bit more room to fall. before seeing anything like a bounce. Stocks like Microsoft may be starting to look at the 200 period on the weekly. Some of these more synthetic supports. And as you drag the chart out, you'll notice there is some potential horizontal defense, but we're not quite there. So these are stocks that are weak, getting weaker. Stocks like Google, same concept, 200 period on the weekly, longer time frame synthetic support, but notable because they have acted as support in the past, even in the most dire of sell-offs. Of course, was the pandemic lows. Stocks like Amazon, in this case, okay, not in the same position, also not making fresh June lows. So notable here that we're not really seeing all stocks aligned, but you compare that, once again to a stock like Meta. This has been one of the worst performing larger market cap names actually coming into its pandemic lows. We talked about this for a couple of sessions. And then kind of anchor that with some of the NASDAQ stocks like NVIDIA. This is where they are. This is their location at the moment. So if the market is going to continue breaking, we need stocks like Apple. These are the stocks that are going to carry the market forward if it wants to continue selling. Otherwise, there could be a case here that if this stock does not perform to the downside, it'll hold up the S&P, albeit we've still seen some more bearish tones across the rest of the sectors. And to a similar degree, stocks like Tesla. Now, this is one that a lot of people are noting as one of the stronger, I would say, relative performers this year. It hasn't sold off as much. But from a year-to-date basis, you want to be thinking about how this can impact the market if it aligns, if it starts to correlate. Here, I'll bring up the year-to-date, and I'll just do a day aggregation. Obviously, the stock is down relative to its start, but it's not down in the same percentages. Price as a percentage here, Tesla, amidst some of the highs and lows, is down about 30%. It's actually more than I expected. I thought it was down a little bit less. A stock like Apple is really only down this year about 17, 18%, especially now that we're gapping below. But you compare that to the SPY. The SPY is actually down closer to 25%. So it's more about this relative performance this year and what's going to carry the market forward moving into these new price levels, especially on a similar analysis here as the S&P is also getting close to its 200 period on the weekly. Now, once again, this is more synthetic support. You need to see things like a reaction against these MAs to even indicate that a trade might be setting up. But it's noting that even amidst some of the deeper corrections in the past 10 years, the 200 period weekly has been a strong area. Even with something like the pandemic, we quickly recovered it. And obviously, the tone now is much more bearish. The Fed doesn't have our back anymore. We're not in a period of even shifting into a period of QT. There is no pivot at this point in time, but technicals are technicals. And if we see a reaction here, we might see some stronger bear clearing amidst this precipitous fall in the overall market. So these are some things to watch out for today. If you are going to watch a stock today, Apple is on our watch list. It's on our gappers. Got news. And it's going to drive a lot of trade today, regardless of what happens. Be aware of 150. If there is a rally today of any degree, and Apple is part of it, understand that 150 is not only a target, it's a gravity point. It's going to be really hard to counter a trend until you get to 150. Even on yesterday's session, I want to show how important this is amidst that massive sell-off across multiple stocks. Look at what Apple did at 150. take off the percentage here now that we're talking more price. I mean, look at the precision here. It's notable. It's worth trading. But understand that if you're fighting it too early, you're probably not going to survive until you get to that price level. So no matter what the trend is, 150 is right. It's a magnet. It tends to bring the price into this area before seeing bounce or some inflection. And when you see that kind of trade, no matter how deep this drawdown is, no matter how bad the news is, we start to rally into it, understand how high it can go before giving relief back to the downside, even if it does set up better. So just note that inflection points are important, not necessarily because of trade around it, but if you're trying to do things early, sometimes the market can draw into that first before seeing counter play. Happened a couple of sessions ago and it happened yesterday. Be aware. So Apple, hopefully we get some opportunity today on that one. I think everything else is going to be in line with what we talked about basically over the past week. Dollar still advancing, making new high on yesterday's session. Possible that we're seeing stalling momentum here. If the market's going to rally off of the gap down open, the dollar needs to pull back. That would be your first clue that something more aggressively bullish, a bear covering style rally could occur today. It needs to start from the dollar. So be looking at the dollar to kind of signal whether to be long or short. That's one thing to consider. VIX, add resistance. It'd be nice to see the spike today, just basically get it over with. But obviously, we're still in that range of high risk, high expansion overall in the market. Volatility futures are, of course, still backwardated, so still inverted. However, lots of relative highs starting to come in. It'd be nice to see a little bit of relief here coming off of these indicators, these moments in time where the risk has gotten so high to the downside that the market counters it. Something like P-call, are we seeing spikes? We saw one a couple of sessions ago. We could see one today back into the 1.2 to 1.4 range. This is usually going to indicate some sort of short-term bounce signal as the market overall is a bit too bearish and counter a bit too bullish in the option ratio for puts and calls. Be nice to see that spike today just to get those extreme readings out of the way. And then our interest rate. I'm going to just use the 10-year here, but seeing an inflection at 4%, just a nice psychological price for the market to counter, not to hold, but more of a risk reversal. If things get too parabolic, you're often looking for those sharper inflections whenever a key level is met. You don't really know where it's going to be, but you get an idea once you see it. And usually you're going to be looking at prices or just areas of high interest in the market. One way to track this would be just looking at something like TLT. It's not really tracking the 10-year, but it would be indicating a little bit of quote unquote buying in the bond market. If you want to track it maybe through futures, you can go directly to the notes. So the 10-year would be the /ZN. Notice how we're getting a slight move back to the upside this morning. It's obviously an extreme sell-off in this product. And CB, you're looking at the 30-year. So it's moments, it's points of inflection. I think today is going to be key, whether you're looking at stocks or particular products, indicate what sort of trader to be today, what sort of bias to have. If enough things inflect today, it's one of those high risk, high reward trades, even though it is bullish. If the market inflects here, we could see the type of rally that really surprises people off the lows. It's been hard to time. And of course, it doesn't have to happen. We've seen failed breakouts before, but I'm mostly noting the position that the market is in. If we can recover the balance range, and you're already seeing signs of that this morning, if we can get back into balance and all of our risk factors inflect today, that's enough fuel to cause covering. And we're going to talk about how powerful that is probably tomorrow whenever we see the results. So be careful today, regardless of your bias. Watch stocks like Apple and Tesla. They're on our gappers. They're going to move the overall S&P, and they're very likely going to just be in play. So they'll have some good volatility today to actually trade. Understand the dynamic here in the market. This is not really about selling. It's about, some of the behavioral characteristics of how the market has to move and the idea of risk in the market, who's in favor to lose the most, who's in favor to gain the most. These inflections offer high risk to high reward. Staying bearish at some of those inflections has been more or less the beginning of the rip your face off type rallies, and they often are going to come from extremes. We've seen a couple of those examples down here. This is probably one of the most extreme examples we've seen. But understand that if the market does this on any session, that's the kind of trade we'll have to deal with. It's the kind of one-sided trade, even though it doesn't make sense. It's just an inflection point. So trade it appropriately, don't get trapped on the wrong side, and obviously try your best to take advantage of it while it lasts, and be looking for reasons to counter or obviously step in bearish, which has been the main driving force across the market. So with all that said, my name is Jared. This is Engineering the Markets. Trade safe today. Best of luck, and stay tuned for pre-market prep. We'll talk a little bit more tomorrow, and hopefully we'll see some of this impact show itself on today's trade.
Good morning, global traders. How's everybody doing today? I hope you're all having a great day. This is Peter, your humble host, with you today with a camera that doesn't seem to want to focus. And with me, of course, I have the one, the only, the Sultan of Stocks, the necromancer of news, the one, the only. It's Norm.
Wow. Almost 4 years of doing this show. Never had an intro like that, but thank you, sir. We're going to have some fun today.
Absolutely. Why not? We should have fun every day. And wow, and what a difference a day makes. If we start looking here, yesterday, if you remember, we had a list that was all green and no red. We got a little more balance here, but as I'll show you in a minute, what was green yesterday seems to have made a turnaround. And we've got some interesting news out there. So with that, Jared was just giving us a high-level overview of the markets. Why don't we look at what's happening overall in terms of the economic calendar?
Yeah, we just had the trade and goods report come out at 8:30. Not really doing anything. Pending home sales index 10 a.m. We've got a ton of Fed speakers sprinkled throughout the day again today. But the big news, and I'm going to apologize in advance for this because I'm not an expert on this. Actually, I'm part of a group of people that hold a ritual every year celebrating the fact that we're not. And we do that by usually cooking cured and uncured meats over large flames, imbibing mind-enhancing liquids, and causing large explosions after sunset, called the 4th of July. You still put their face on your money. But anyway, the Bank of England has gone crazy, and they have started essentially easing fiscal policy by buying bonds in putting liquidity into the system over there, despite inflation and everything else that they have as well as us, when our Fed is doing the exact opposite. And you guys, I know Andrew wrote about the pound collapsing the other day or yesterday or Monday. And all that's been going on. So it's a bit wild. I know, they have new government came in and everything else. I was actually sitting watching when this was announced very early this morning, might I add. And the market started going crazy. Things were down. I mean, like the Dow, I'll use that because they probably have that on the screen more often than anything, and that's what's spoken about in most mainstream news sources. A couple hundred points in the futures, popped to positive. I think it went up to plus 70 and then fell again. I mean, you can see it on the SPY. It's been a wild morning. It's going to be an interesting day.
Yeah, I think it will be. Whether people are happy overall with what happens or not, it certainly will be interesting. So, like I said, take a look, right? This is the exact same list of stocks we had yesterday, and where it was all green yesterday, it's pretty much all red today. So we're seeing sort of a change, and I will come back and say, remember what we were warning you about pre-market. Just because the market was gapping up green doesn't necessarily mean that you can assume that longs are a safe bet. And sure enough, if you look at yesterday, we gapped up. In fact, let's move into a 60-minute chart. You can see yesterday how we gapped up here and then basically sold off, like in the morning, more or less flat with a little choppiness, sold off through the early afternoon before leveling out slightly lower than the previous day, than Monday. So, today, who knows, right? We're marginally green right now on the SPY, but as Norm pointed out, big drop down this morning, big news out of the UK, of course, with the drop of their dollar and the government saying that they will buy as many bonds as it takes for them to stabilize their dollar, which seems like they maybe should have thought out the plan a little more. But, it's easy to throw stones from over here. What do I know? I mean, I don't control these things. So anyways, so here we are. So let's clear this secondary list. And I'm going to start, we'll start. We usually start with the gap up. Let's start with the gap down today because the one that's most on my mind is down the list, but we'll get there in a minute. ATXI is on the list. Remember, this was up here yesterday, and it had halted, I don't know, like 5-6 times throughout the day yesterday. It was, crazy trade if you were willing to take the risk on it. It was a typical low float, right? It had the opportunity. It also had large periods where you could just get yourself chopped to death because, look at these candles. It's sort of hard to see it. Let me go to a 5-minute here, and maybe it's easier to see what was going on. But, these candles look relatively small compared to the move, but these are like almost $1 wide. So, in a stock that's only $9, that's pretty big movement, right? 12% or so each one of these larger candles. And look at the big red ones moving up until it didn't, right? And then that could kill you. So anyways, ATXI is gapping down, really just a hangover from yesterday, Norm, unless there's something new, but I fully expect that's what it is.
No, you nailed it.
Yeah, and we're just going to move on. That's all I need to say. I'm worried about people trading them only because there is great opportunity, but massive risk. As long as you understand that and you know how to trade it, then by all means. But it's not what we generally advocate here, and not the style that most of us trade. All right, LI is on our list. It's gapping down this morning, 4%. It's got relatively low volume, like 230,000. I didn't find any news on this. I was trying to figure out why it's down, and I noticed XPEV has now joined it on the list. They both seem to be in almost the exact same position, almost the exact same. Well, XPEV, sorry, 640,000 shares, but gapping by the same amount. So
the only thing, I don't see anything specific for them, but their NEO, somebody involved with NEO did say something about concern for business overall due to European problems. So I don't know if that's having something on this or not, but yeah, I haven't seen any news specific to XPEV either.
Yeah, so they're both gapping down. Often they provide good trades just because of the liquidity and the volume that they trade. So we'll see what happens. Sorry, Dan was just posting some news, just general, I guess, downward pressure on on Chinese stocks, which not surprising there. So, all right. So the one I actually was most interested in talking about this morning is Apple, because I find Apple, it's interesting that it was gapping down and was gapping down, as you can see, quite more significantly earlier, recovering some of that. And I'm sure you have the news on that, Norm.
Yeah, word was they were going to increase production on the 14 devices, the iPhone 14s, and then they're not doing that because of demand not being there that they thought was. So yeah.
As we have in the title of our YouTube, right, we've got fewer apples out there as they've cut that. It's funny, right? They've cut anticipated production. They actually haven't cut their production numbers. They're just not ramping their production up as they had sort of predicted.
I think it's even more obscure than that if you put it properly. Their anticipated increase in production. So that it wasn't even, they were anticipating an increase and now they're unanticipating it. How about that?
I love it. They're unanticipating it. Yeah. So, the market loves to react to these things. But remember, that's a pre-market reaction to the news. So while that was, interesting news, I love watching Apple because to me, it's a great example. Apple and Tesla are two that can sort of slough off or ignore news, when they see fit. So Apple, this could very well be back to green by the time the market's open or head there shortly after, or it could tank. I honestly have no clue, but I'm going to watch it and see what happens. It's definitely making my list so far this morning. Last on the gapper down, we have Qualcomm. Don't often see this pre-market, just over our volume threshold at 120,000 shares. Not a big gap down, and frankly, I don't like trading it, but Mike in the room trades it quite often, so I don't know what's happening with it.
Sympathy with Apple. Their biggest customer is currently Apple, so.
Okay, so sympathy play. So interesting. So that is not quite as exciting, frankly, but you could see a more consistent downward move on Qualcomm because if people are anticipating growth in customers as a result, that's not occurring. Anyways, we'll see. Qualcomm tends to move a little more with more stability. We'll put it that way. All right, on the gap up, we've got a bunch of, looks like, I'm guessing, smaller tickers, but we'll start with them and see what we get here. PRTA.
So before we even dive into this, I'm going to say that Half of our gap up list is all on one piece of news. It's something we've discussed repeatedly, a subject on here, and their biotechs, BIIB, has had very positive data shown in studies of a drug that they've created, co-created with a Japanese biotech, in greatly slowing the progression of Alzheimer's. That is moving them. Obviously, they're up 50% this morning. They can move wildly. Be very, very careful on that ticker. And as we've discussed here many times, when these things happen with Alzheimer's drugs, they pop and fade because as people dig into the news, they realize maybe it's not as positive. I'm not saying that's the case, but just be careful with BIIB for sure. PRTA, LLY, and SAVA are all moving in sympathy on this play.
Oh, okay. And look, I didn't even realize that. So PRTA, low float, right? 44 million shares, 455,000 volume. LLY, yeah, up 8%,
Like
300,000. And Sava, 200,000 shares, 6%. So we'll put those all in the same bucket. BIIB is the one I definitely like. But as Norm points out, it's one of these rarities, I would say, of a stock that's $300, but trades like a low float, which means, it will be dangerous. Be very careful if you're trading. I'm not saying don't, just saying if you are, just be aware. Pre-market, we were getting, $5-6 candles. I wouldn't be surprised at the open to start seeing $10 candles on this. So we'll see what happens. I mean, everybody's pretty excited about the news, but as Norm says, the memories are short and they forget often, pun completely intended. So
wow. That's brutal.
Right. Too much? All right.
I don't remember.
Okay. Hey, I might have a cure for that. All right. NNOX. NanoX. Up 17%, only on 190,000 shares. Another lower float, 40 million shares in the float here. Is this related or is this something else?
To be frank, I haven't really found anything too crazy on here. I haven't seen any news. So if somebody has something, throw it out there. I've missed it.
Okay.
This has popped up on the list occasionally. It didn't seem like the greatest trading ticker. Volume's very spotty on this. It's most of these, it's only a couple thousand shares, if that many traded a minute. So and it's $11. It just not my bag.
Not your. It's a bag of noodles. So as everybody likes to say. Nobody likes to say it, but I said that by accident one day, and people keep reminding me of it. Anyways, all right. So Lilly and Sava we already talked about. HUDI looks absolutely terrible. Virtually no pre-market activity, despite the 100,000 shares. I don't even know why it's on my list. I see it gapping. I see no gap. I'm skipping over it. I don't even know what's going on here. What the hell? What is that? Anyways, okay.
It's trash.
Yeah, Hain Celestial? Hain Celestial Group. I have no idea what they do, but I like their hubris in putting Hain Celestial as their name. Anyways, gapping 3%, 100,000 shares. The daily looks very consistent to the downside.
They sell organic foods.
Okay.
They are being included in, I believe, the S&P Small Cap Index. So they usually things get a bump on that because it'll be bought up with pension funds possibly or 401ks and stuff. So.
Right.
Speaking of bag of noodles, these are organic bags of noodles.
Excellent segue. Well done. So I don't know about Hain. It might get a gap up, as Norm said. That's exactly what happens. People buy it because now they have to include it, at least in the indexes. Sometimes it goes into some other funds, which means you see a little buying, but it's not necessarily going to happen today. So we're seeing a little bit of a gap pre-market, but it doesn't look in play, quite frankly, because there's not really much happening.
Looks like garbage. It's been a couple of block trades take place.
There you go.
At 823. So that's essentially all of the volume.
Yeah. Okay, well, there you go. So I'm not going to include it on my list. We'll keep it off for now. A couple just popped up at the bottom here. Netflix. I've been watching it the last couple of days. Hasn't traded bad during market hours. There's been opportunity if you watch it closely. Not much pre-market action today, but I've found that's fairly typical on Netflix. It's up 2%. I don't imagine. I mean, unless you tell me, Norm, there's some news. But Netflix is Netflix. It can just move a little bit.
They got an upgrade today out of an obscure analyst bank.
Okay.
So investment bank.
Probably shouldn't move them too much, but who knows? We'll see what happens. And it's gone again. So gold had jumped up on the bottom here, which is it is not an ETF. It is a specific company. And Barrick Gold, I always have to remind myself of that. It was up 2%. It's now just below the 2% mark. 300,000 shares, little greater volume than normal. I'm not sure if there's news on gold. Probably not one you looked up, Norm, because it's just popping on and off the list here as it crosses that 2% threshold.
I mean, I don't pay a lot of attention to these because generally they trade pretty terribly. But there's a headline from this morning: Nevada gold mines closes previously announced sale of royalty portfolio to Gold Royalty Corp.
Okay.
So that's all I see.
Gold miners in the mining, they love to, they just trade assets a lot, right? And I don't know how that creates value, but somehow people seem to think it does, and stocks go up and down as they sell a mine to another one who buys a different mine. And anyways, I stay away from it, as Norm said. It's tough to trade these. The mining stocks, energy stocks, specific, especially small cap energy stocks, often very hard to trade. If I'm going to trade anything, I go to some of the majors like Oxy, which has come up in the last year, suddenly is trading well with consistent volume. That different industry, I realize, but sort of just an example of something that can trade reasonably well. So somebody's mentioning TSM in the room. I'll just take a look at it because with news on production, TSM can often move. I mean, they got low volume, nothing particularly to, put it on my radar this morning. I often like to scan through those throughout the day, right? So I will watch AMD, certainly, sometimes NVIDIA, and then I flip through the others, right? Intel and Qualcomm.
TSM's an Apple play, just like what was the other one we had a minute ago? Oh, QCOM.
Yeah. So QCOM looks a little better than TSM so far this morning, and generally I would say it actually moves a little better. I don't know if TSM is dual listed, but it sort of trades like it is. So, but anyways, not my favorite. So let's go to the room and to our chat room and YouTube. And if you guys have other tickers you'd like us to take a look at, let us know. Norm, anything we haven't covered that you want to take a peek at?
No, I want to see how things pan out with all the news that I was discussing earlier. So I'm going to, once again, sit until we get a little closer. Things are popping up, but I have a hard time trusting them these days. Like yesterday I traded AMD, and it was beautiful, but I knew to get the hell out of it because it wasn't going to hold.
So you've got trust issues. I can't blame you.
Yeah. And commitment issues right now.
and that's a subject of an entirely different online post. I actually traded AMD at the open. I rarely take a trade right at the open, but I was seeing strength at the open. I took AMD for the initial pop-up, and as Norm, as you said, right, you had to sort of get out of it quickly because it did not maintain that strength much past the opening 30 minutes. So it went back down quickly. Okay, so with that, people are throwing up a couple of tickers here. Roblox. Roblox people have been mentioning over the course of the day. I've rarely put it on my list, and certainly haven't over the last couple of weeks. Not doing much so far this morning. Almost no gap at sort of less than 1%. 200,000 shares traded. Let's take a look at what it did yesterday. Well, it showed that move down. Like almost every stock had this big move down, starting around 11:30 or so, to the lows about an hour later, where everything hung out for a while. So Roblox did the same. I don't know if there's any particular reason to watch Roblox, but if you like it, then watch it. Good intraday play.
I don't see any extremely interesting news on it, but I did just discover something I fell in love with. There is a video game ETF.
Oh. Called?
Yeah. Nerd.
Nerd. Okay. Round Hill video games.
Anyway.
Okay.
Yeah.
Well, there you go.
Anyway, that's
I'm gonna have to
awesome.
add
I love
that.
it when they appropriately name ETFs.
Yeah, I'm gonna have to add that to
And
my
tickers
list.
in general.
I keep a list of, where are they here? Here they are, of all sorts of ETFs to watch. So let's put Nerd on there, and then we can, you never know, because maybe it'll take off at one point. So there you go, added to the list. All right. What else? Someone else mentioned Mike Kerr. Someone else mentioned SQ. Right, that's the other one I wanted to look at. SQ. Not doing much so far this morning. SQ's been another one of those that decent trader on the right day, but I have a problem because I got burnt by SQ a couple of years ago and still bear the scars. So that's my therapy to deal with. But if you like SQ, by all means, but not special this morning. All right, on YouTube, somebody's mentioning Lucid. Lucid could be just moving along with some of the other EVs in the sector. It is gapping up marginally. It was sort of red this morning, moving up again on very, very low volume. It shows 200,000 shares, but most of that was way earlier this morning. I'm seeing virtually no transaction volume over the last 45 minutes. So I'm going to stick with LI and XPEV. They're probably the better movers on the morning. Okay. I think that's it. So with that, why don't we get to showing you what we're having in in our community, as we do every day. We'll quickly run through. It is midweek, and we're sort of halfway through our schedule. So Norm, over to you.
Yes, every Monday night, onboarding technology with Carlos. Thanks for covering that the last couple of weeks, Mike. That is 8 p.m. Eastern, onboarding technology every Monday night. Tuesday, we focus on strategy. Come into my trading room. This is the 30,000-foot view of Andrew's trading, from technology to his favorite setups and everything else. Are you on the website, Peter?
Yes, sir.
You might want to refresh that or something. Or is that old? Because that's been fixed, and I don't know why it's coming up like that on your screen.
I guess I hadn't refreshed.
There you go. See? Well, not only that, you were showing stuff from last night. So, advanced risk management next Tuesday, 8 p.m. Eastern. Andrew's webinar was postponed. That was last night, and he is not feeling well after his surgery. So, apologies for that. We'll get you a new date. Advanced risk management, that's next Tuesday, 8 p.m. Eastern, and then volume price analysis with Thor at 8 p.m. on Tuesday. Speaking of Thor, he'll probably, he's here right now, but we'll see how long he gets to stick around with hurricane coming his way. Probably have some power outages. So all the best to all of our friends in Florida that are going to be dealing with that and already are dealing with that. So that is 2 weeks from yesterday, 8 p.m. Eastern. He should be back up and running and solid by then for sure. Randy Howell tomorrow, or excuse me, man, my days are off. Tonight, talking about trading under stress, 8 p.m. tonight. Then next week, Dr. Kenneth Reed, Bear Market Psychology Part 2. Don't get fooled again. This is important when we see these bounces like we did the last month or so. We'll see if things fall off or whatever. But a lot of people thought we were bouncing and have gotten burned. So, all right. Thursday is for mentorship. 11 a.m. with John, 4 p.m. with Ed, 8 p.m. with Thor. And then don't forget about stocktradingsimulator.com, our free web-based replay simulator where you can go 24 hours a day, 7 days a week to hone your trading skills. And tradingterminal.com, where you can go check out news. It's a hub, overall hub with you can get scanners just like the scanners we have in the room. Phenomenal stuff that's coming out there. So check that out, tradingterminal.com. If you are looking to come in the room and give it a shot. You can use the promo code PreMarket24. It'll get you a discount off the intro membership, which is 7 calendar days, 5 trading days in the room. It is a one-time payment. It does not recur. And if you'd like to gain access to all of the webinars we've been discussing, use the promo code READ50. You'll get half off the Elite Annual membership and a free one-on-one coaching session with Dr. Kenneth Reed.
There you go. Sorry about the slides there. I had another one of those moments. I did one of those rookie mistakes where I couldn't get the right slide up. So you know what you do when you panic? You click faster, because that always works. And then it was updating behind me and I couldn't figure out what was going on. So,
Did you take your Prevagen?
apparently I didn't. Natural
Apparently
high.
you skipped your Prevagen.
Yeah. All right.
If you run out, just eat a jellyfish.
Okay. I will run.
You haven't heard? Do you not have Prevagen up there?
No.
The ads for Prevagen, they're on the air down here. Totally, it's an over-the-counter treat. It's not a medication; it's a supplement. Let's call it.
Okay.
And it's supposed to help your memory, especially as you get older, and your mind to be clear. And one of their selling points is it is made of something found in jellyfish.
Oh.
I didn't know jellyfish were all that smart.
Well, I guess they're smart to have lived this thing. Is this what we're talking about? Improves memory.
Yeah, that's probably
there you
good.
go. Extra strength.
They don't tout it as clinically tested, not proven, but tested. You can clinically test arsenic. That doesn't mean it helps somebody.
I love that. Actually, now that you point that out, that's beautiful, because clinically tested, everybody died, but we did clinically test it.
Exactly.
So, enjoy. Anyway, okay.
So it's always been very funny that they tout that it's the active ingredient comes from jellyfish. It's like, okay, well, great. Anyway,
all right.
Sorry. Probably just lost half our viewers.
Yeah, I know. This has been your unpaid ad for Prevagen. Take it at your own risk. Okay, so with that, give us a thumbs up. Why not, right? Hopefully we're entertaining, if not educating. So, all right, so let's go through and set some levels as we do every morning on these things. Apple is, look at this. Apple is up here and still red so far this morning, but look at this pre-market action, looking like the market's open, in fact. So I'm going to set the my tinfoil lines, as I like to, right? That settlement period at 8 o'clock. Probably that's going to be well below the price action, but you never know, so it doesn't hurt me to put it there. I've got the highs and lows of the previous 2 days as areas to look at, with this with Apple sort of having been stuck in a range. Look at how small the candle's been over the last few days. That means that there is an opportunity for this to move out of those ranges and do something interesting. We're sitting below 150. Obviously, the whole dollar numbers are places to watch. Apple has loved the 150 level, right? It has gone to it, bounced off it from underneath, from above, like many times over the last little while. So as you can see with all of these candles in here. So we're going to keep an eye on that. If it comes roaring back, 155 would be the next level to watch from a whole dollar perspective. AMD, I always keep an eye on. Nothing special about it this morning. I again will mark the settlement levels here at 8 o'clock, just so I can see it. Really, we are stuck in this little range, unbelievably to me, way down here at $67. So we'll see. If we've got a breakout of the high that it set yesterday, or the low that, well, actually, this low here this morning was actually lower than the previous 2 days. So let me go back here and just take a look, because we are well beyond the June lows, which is something that we haven't talked about this morning. Why can't I get my charts here to, there we go, to move over. So the June lows is something everybody's been watching, right? Because the thought is that if we break the June lows, we could have a big drop below that. So we'll see if that proves true. We're back here into July, of 2020, where we had a couple of days between two gaps. So this tells me that there is a danger spot right here at the bottom of this gap. What is this? Low 64.05. So I'm gonna keep an eye on this 64.05. If we get down towards that, we could very well move quickly down to 62, which is the area at which this gap started. So I can't get my levels to cooperate here this morning. there we go. All right. So that could be something to watch for on AMD. Tesla, also sort of in this range the last few days, highs and lows of yesterday, currently bracketing the current price. We got the settlement, which is again, well, this spans over 2 minutes, so I'm going to mark the 2 minute here. Somebody jumped the gun on this with the volume, or was a little late, however you look at it. We'll see if that comes into play at all. I'm expecting this to have some movement here today, but we'll have to wait and see. With the inexplicable decline of the EV stocks in China, that often gets Tesla excited and it starts to move. Oxy is the other one I put on maybe sort of my permanent watch list here, moved it up. But again, not doing much. I do need to mark the high here at $60.07. Not a coincidence that that is the high level to watch. If we get up above that, we could move into this gap. And I've got an area just below the gap at 61.25 marked from previously on my daily chart. 61.75 is the actual low of this. So, I find that this one, Oxy, responds very well to these levels. So we'll see if they come into play and what happens with it. All right, LI and XPEV we mentioned as two that are having gaps down this morning with a lot of the Chinese stocks. But the EVs seem to be especially affected, so we'll keep an eye on LI, XPEV, maybe even NEO. We'll see what they do. Really, I've already got my level set. Look at this. The highs and lows of the previous 2 days set the top side. And on the downside, let me get rid of a previous line down there. On the downside, definitely I want to keep an eye on these lows here. I'm going to put it around 23.75 because that seems to be an area to look for. We'll see if it breaks down there. If it does, then I got to worry about this level here at 22.90. So that's what I'll watch on LI. XPEV, similar story, although we're closer to these lows that it's set. And I don't know. Let's see if is this an all-time low? Maybe. I think we're at all-time lows here. If anyone else knows, let me know. Yeah, looks like it, eh? We're at all-time lows, so that makes XPEV interesting. At all-time lows, you never know what's going to happen, so we really have no levels outside of what's happened the last few days to set here. So we'll see what happens with that. BIIB, we mentioned big news, partnership on an improved Alzheimer's drug. Gapping up significantly this morning, selling off a little bit from the initial gap up, but we could get a move on it. The float is not small on this one, 400 million shares, but I expect it to move as the market opens. So keep an eye on it. As for levels, well, look, you got to go back in time here, and there's this area that is interesting. Back in June of 2021 of last year, look at this massive day candle that moved it up. This is essentially, sort of like a gap, but not quite. But it's showing a level. We're right at the bottom of where this one-day candle moved. So we know that BIIB can move based on this candle alone, where it moved $200, $180 it looks like, from high to low on this day. So, there's certainly room for this thing to move. It's proven that it can do it in the past. So beware if that starts to happen today. Could be a huge opportunity. Could also be some risk. So watch it. I don't really have levels to set. I'm not sure if they're going to be relevant. I didn't see anything great back at that time frame. Qualcomm, one to watch here. Sympathy play, like we mentioned, potentially with Apple. Will it continue its slide, or will it recover back to yesterday's close? The open will tell us. If it continues to slide, you got to go back into 2020 here when Qualcomm was last at these levels. At the downside, I'm just going to set a level down here, sort of covering the bottom of these candles, roughly at 110, sorry. In fact, I'm going to put it right at 110 because I just want to remember that level. That, to me, will be an area of significance. Like $8, another $8, be a big move for Qualcomm, but we saw it do it. I remember back significantly where it just started sliding and kept sliding back here, and I can't remember there was some bad news on it, and then of course it's well recovered and moved well beyond that. But it can move on the right day. I don't know that today is that day, but we'll watch it. Netflix, last but not least on my list here. I'm going to put that settlement period. I like the look of the settlement candle. It might come into play. Oh, I notice I've got a bunch of them on my chart. I'm going to clear everything and start over again here. All right, so there's that settlement candle. We are definitely in a range, right? This is certainly a range. I think Megan in the room was talking about this yesterday, how she saw this. She loves her boxes. She draws a box around this range of consolidation. She traded it short when it hit the top end of that box and got a great trade on it yesterday. So it looks like that box is intact because we're still within that range. So I'm going to leave the highs and lows of the previous 2 days as areas to watch. And frankly, that brackets the price quite nicely. Only if it breaks out of that will I worry about setting some additional levels. So that's it for my list. That's what I've got. I'm just taking a look through our friends on YouTube, which we do appreciate your thumbs up and your likes if you feel up to providing them. So thank you. And in the room, people seem to be talking about the stuff we've already talked about. What else we got here? Probably nothing else. All right. So with that, I think we've covered it. I'll just wait for some of our moderators to load up their lists, see what they're watching. Norm, we've gotten a little closer to the open. Anything new that's popped up for you?
Nothing we haven't discussed, man.
All right.
I'm liking the apples near the top of my list.
Yep. Well, mine too. So at least we're in sync on that one. I do think Apple will be interesting today. We'll see what happens with it. Thor is the first one to have posted his list here this morning, and he's taking a look at the SPY, the Qs, so markets overall, which makes sense. Apple, Oxy, and JP Morgan. JP Morgan we haven't looked at, so let's take a peek at JP Morgan, see if I can see what's got his interest. Not doing much so far this morning. It is sort of been moving down and is roughly at the low end of this range. So there could be, if it's going to move down, there could be some interest in it. So whatever he sees, I'm sure he will let us know in the trade room. Jared just posted his list with a primary list of Apple, TLT, and the market indices. And on a secondary list, he's watching Tesla and the energy stocks with the crude prices at $77. He thinks there may be some action there. So he's mentioned TLT in the room. Let's take a look at it. So this is the 20-year Treasury Bond ETF. So different type of trading. If you're looking to trade this, I can see that this bond product has been moving up this morning on 1 million shares. I don't watch it normally, so I don't know if that's normal pre-market or not, but it's certainly getting a little bit of a lift this morning. So Jared, who likes to watch those, is going to keep an eye on TLT.
No, that's heavy.
That's heady stuff. So
no, it's heavy. That's heavy volume.
Oh, heavy volume. Okay. Yeah. All right. So there we go. For those of you that join us regularly, and we appreciate those that watch us every morning, we're working out the show for tomorrow. We certainly will have engineering the markets, I think, one way or the other. We're just looking to make plans. We have a rare confluence of events. I've got a doctor's appointment I can't change. We've got Carlos on vacation, and we got Thor, who's battening up the hatches for a hurricane/tropical storm. We certainly hope it's a weakened tropical storm by the time it gets to him. But our thoughts and prayers go out to everybody that's in the path of this storm, especially those who are sort of, the Cuba got hit bad yesterday. It's heading towards, I don't think it's made landfall yet around Tampa, but that's where it was heading when I last looked last night. So let's hope
it's turned to the south. It's more down toward Fort Myers, I believe.
Okay, well.
Maybe Thor can go find Jim Cantori, the Weather Channel guy that's notorious for always being in the hardest part of the storm and also exaggerating his leaning angle and everything else. But maybe he can go down there and do the pre-market show live next to him in the storm. Just get a poncho.
That would be awesome. I think that would spike viewership. I would certainly watch that. I'd love to see it. I love it. There you go. that will be Thor live here doing the pre-market show tomorrow. So, Anyways, all right. Well, we'll figure it out, and we'll make sure the show must go on, as they say. So we'll bring that to you tomorrow morning. So take care, anyways, in your trading today. If you're in the storm, then obviously take care of yourself and your family. And we wish everybody all the best. And have a good trading day, everybody. Talk to you later.
Take care, guys. Trade safe.